JJ the CPA here. This is meant for our clients exclusively. And hey, if you would do me a favor, would you subscribe to my YouTube channel? Just hit subscribe down below. What I want to hit on is itemized deductions under the new tax law and then the standard deduction. And here's the thing, focus in on that if you have unreimbursed business expenses, so if you're an employee that you're incurring expenses on behalf of your employer, cell phone, travel, home office, work boots, if you're taking any kind of continuing education, those expenses are no longer tax deductible, okay? That's huge. If you have that, you know who you are. Here's the other thing, been all over the place. State taxes, which include your income tax here in Oklahoma, as well as your real estate taxes. Combine those amounts and you only are able to deduct $10,000. No carryovers, only $10,000 is deductible per year now in 2018. On your mortgage interest, if you have an existing mortgage, you don't need to really worry about the limitations as long as that mortgage is less than $1 million, and if you have one more than $1 million, you already know that we're taking care of you there. If you got a new mortgage in 2018 after, then only the mortgage interest on that mortgage up to $750,000 is deductible. For the most part, your mortgage interest is going to be deductible. On charitable contributions, if you own a small business, stop making charitable contributions personally. Stop. Check out my video where I talk about that and it says no charitable contributions ever, okay? You want to, with charity, get a receipt if you do not own a business. Here's the thing. Pretty much itemized deductions now is up to $10,000 state real estate tax, your mortgage interest, and charitable contributions. If you don't own a small business, make your charitable contributions just like you always have. Add those three numbers together, and if it's more than $24,000, okay, this would be the standard deduction, then we're going to take your itemized deductions. If it's less than the standard deduction, bam, we're going to take the standard deduction of $24,000 married filing jointly. So here's the thing to know. Mortgage interest, don't look at it as non-deductible. Charitable contributions, don't look at it as non-deductible, you non-business owners. You need to look at it as I'm going to add these things up and I'm going to compare it to my standard deduction, and the higher of is what we get to deduct. Bam. So a lot of our clients are going to benefit from that. Really quick though, just to give you a hint on that next video that you need to watch, business owners, with the charitable contributions, if you pay for it through your business, it can be a sponsorship, which is 100% deductible. At the individual level, still deductible, but if you're in a circumstance where you're limited on your $10,000 in state taxes, and maybe you have your house paid off or you don't have a lot of mortgage interest, it may be that your standard deduction is going to exceed your itemized deductions. So it's not that you're not getting the deduction, it's just that now you can take an additional benefit by running it through your business, not as a charitable contribution, but as a sponsorship. Check out that other video. All right, that's itemized deductions. If you have any questions, let us know. Bottom line, please subscribe to my YouTube channel, and I've got to end all of these videos, and you already know this, but I've got to say it. You've never met a CPA quite like me.